Welcome to the Prosperity Gap, where we discuss the financial gap that exists between where we are and where we should be. It's time to bridge that gap.
Hey everyone, it's CR Tlain. I'm here with a special podcast that we have with Ben Smith. He's a CPA from Etrends Tax Accounting. He is their senior tax manager out of the St. George, Utah office. We're excited to have Ben come on and talk about two different tax tips. It's very important that we look at home office deductions and is your business travel really deductible? Those are two important tips right now as we're getting into the tax season. And we wanted you to sit back and enjoy this video from Ben and get some great information.
Hello, Ben Smith here. How do you deduct part of your home? The easiest way to do it is with a home office deduction. I'm going to go over the rules for home office deduction today. Hopefully it helps you out and maybe you can rearrange your life a little bit and capture this deduction. So there's a few rules. Number one, the exclusive test. And that is that your home office has to be used exclusively for business. Okay? This is probably the test that trips the most taxpayers up. They have a difficult time setting aside maybe a part of their home and only using it for business. Well, do a little planning. You can probably get there. Exclusive means you can't use it for, you can't watch TV at night in the room. You can't use it as a puzzle room for your kids. You can't use it, whatever. It's just for business. All right. You go in there, you do business. That's it. Exclusive. Okay. Regular is the second test. It has to be used regularly for business. Let me give you two examples. One that qualified as regular and one that did not. The first, it qualified as regular. There was a contractor. He used his home office 1 hour in the morning and a couple hours at night. He did billing, followed up with clients with phone calls, made notes, did payroll, things like that. He did, and he did that in the morning and the evening. So maybe 2 to 3 hours a day. That was regular. Another taxpayer tried to deduct a home office, but he only used it once every 2 weeks to have a management meeting. That was not regular, according to the courts. So it needs to be regular. Test number 3, it has to be for business, okay? So it's not for checking your stock portfolio unless that's your business. It's not for clipping coupons or whatever. Just because what you do in there might be to your financial benefit doesn't mean it's for business. So it has to be for business. And number 3, it has to be your principal place of business. That sounds scarier than it is. Principal place, so if you do administrative tasks, that qualifies your home office as a principal place of business. So for instance, if you were a doctor and you saw patients at a clinic pretty much every day, that's okay. If you use your home office for administrative tasks, taking notes, billing, managing the business, whatever, all of those activities, if they're done at your home office, that qualifies your home office as your principal place of business. Now, who takes advantage of the home office deduction? Generally, it is sole proprietors, people who are filing Schedule Cs on their individual income tax returns, as well as partners and partnerships who have properly structured their partnerships. They can take the home office deduction on their individual income tax returns. You can actually also have a home office maybe if you're doing rental properties. Here's the thing. There's also an opportunity to gain or get a home office deduction, though it's not called a home office deduction. It's essentially the same if you are operating as a corporation. And the way you do it is you don't take your home office deduction on your personal income tax return. You take it on your business tax return, and you have to do it through employee reimbursements. Okay. So in other words, your corporation as the employer reimburses you as the employee for expenses that you as the employee incur in maintaining an office at home. All right. So it's a great way to do it. It's also actually a relatively Um, it's an easy way to do it. It's not as difficult as doing it like you normally would as a sole proprietor. You don't have to fill out a whole extra form on your tax return in order to take advantage of this deduction as if you own a corporation. Okay. Let me give you one other benefit for having a home office. It's going to increase your vehicle expense deduction. And that's because when you have a home office, all of a sudden, the miles that you drive from your home office to other places of business become deductible. If you don't have a home office, those miles are commuting miles and they are not deductible. So now you've captured a home office deduction and you've captured additional vehicle expenses that you can deduct. So home office deduction is a great deduction. Um, just with a little bit of planning, you can probably do it. By the way, there's other things you can do. For instance, the exclusivity test is not applicable to the storage of inventory, right? So if you sell on Amazon or eBay or something like that, or you have your own online store, um, you can store inventory in your home, and the exclusivity test is no longer applicable. You could hang those. Maybe if you're selling clothing, you could use your closet. You could use a garage space. You could do a number of things and still use those spaces for personal use as well. So
The second one he's going to talk about is my business travel really deductible?
Tonight I'm in Las Vegas, and you know what they say, or at least they started saying, I think yesterday, what happens in Vegas only happens in Vegas. I don't think that's any more true than when it comes to food. In Las Vegas, you can eat really well from all around the world. Tonight, I had a meal here at Minchia's. It's an Italian restaurant here in Las Vegas, and a great meal. And there's only, I think, one thing better than having a great meal, and that is being able to deduct your great meal. So just for a minute, I wanted to explain to you a little bit about the travel rules, and which also cover meals, and maybe give you a couple hints how you can get a bigger bang for your buck when you travel. And of course, the best way to travel is to make travel business travel, because business travel is deductible. When travel is for business, you get to deduct your transportation costs, you get to deduct your lodging costs, and you get to deduct your meal costs as well as some other miscellaneous costs. So, so how do you get there? And how do you do it and still be able to enjoy yourself? Maybe put in a few personal things into that travel and still legally get to deduct it. Well, without going too long, let me give you one quick key, and that is you need to have more work days than you have personal days. And work days, here's the key. For a day to be a work day, you have to work 4 hours and 1 minute. And if you have a weekend, let's say you work 4 hours and 1 minute on Friday, and you work 4 hours and 1 minute on Monday, well, then guess what? Those weekend days just became work days too. So you need, and by the way, that works with holidays too. Let's see, it could be a 3-day weekend. There could be a holiday on Monday. You work on Friday, work on Tuesday, and guess what? All those weekend days, including that holiday, become work days, and you get to deduct your lodging, your meals, your transportation, and miscellaneous other things. You know what? If I needed a haircut today, I could go get a haircut, and those would become deductible. If I needed my clothes cleaned, I could deduct those while I'm traveling. So there's a lot of costs I can deduct while I'm traveling, including meals. And of course, for meals, you get to deduct half the cost of your meal. Well, hey, for many of you, that more than pays for the tip. So there you go. There's a tip.
Thank you so much for joining the podcast today. We are very thankful to have Ben Smith come on and talk a little bit about home office deductions and is my business travel really deductible. You can find more of Ben's videos over on Etrends Group on YouTube. or you can find more about Ben and the rest of the group at Etrends at tax.etrendsgroup.com, and follow them if you have any questions, as tax season's here. And it's very important that you are focused on making sure you're doing the right things for you, especially for your business. You have been part of the Prosperity Gap, the financial gap between where you are and where you should be. And until next time, keep investing, saving, and using your money for good.